Bienvenidos a Negocios, es tiempo de mirar a los mercados y lo vamos a hacer con la compañía de Moya, que es Senior Market Analyst de Oanda. Hola, mejor dicho, porque no sé qué hora es ahí, así que encantada de saludarte desde Negocios.
Thank you for having me.
So, Edward, I was just saying welcome to Negocios. We're gonna see the markets. Now we have an environment in which we see resurgent inflation and also rising bond yields. Is it time to rotate portfolios?
Well, I think you're starting to see that happen already. Most of this month, we've seen the smaller cyclical stocks have outperformed the Nasdaq. We've seen tremendous weakness across the Apples and Teslas and all the other FANG stocks. And right now, there is that belief that if the reflation trade continues, if the global economic outlook improves dramatically, you're going to see higher interest rates. You're going to see the Fed be in a position where they're going to have to pull back accommodation. And what that does is that really kind of derails the big move in tech. So I think you're probably going to still see a little bit of hesitancy as far as completely jumping back on big tech stocks. And you're going to see that the cyclical rotation trade is going to continue as long as the economic recovery looks strong. And that's going to be dependent on the vaccine as far as how effective the rollouts are globally. And right now, it looks like the U.S. is off to a good start with the fight against COVID, and that's probably why you're seeing the U.S. assets really lead the way.
And if we look at wealth holders, where are they focusing their investments?
Well, right now, you're seeing that the bond market is selling off. Treasury yields have been skyrocketing, and that's really kind of provided a little bit of a concern as far as what is taking the Fed so long to kind of cap that move. And I think there is going to be expectations that the reopening trade is not going to go away. Right now, the Fed has been focused that the recovery should really accelerate in the second half of the year. Wall Street is saying no, it's going to be a lot sooner, and that's why you're seeing a little bit of erratic behavior, I think, in these last couple of weeks. So I think what you're going to probably continue to see is that a lot of the wealth managers are going to be focused on continuing that rotation trade into cyclicals. I think you're going to see that everyone has been talking about a weaker U.S. dollar. That has not really happened so far this year. It's probably going to happen, I think, in closer around the summertime. I think right now there's just too much of overly bearish position right now on the dollar that you're going to probably see a little squeeze here. And I think that if Treasury yields continue to rise, that's going to really dominate some inflows as far as U.S. denominated assets, especially in the bond market. So I think there's going to be a little bit of a period where you're going to anticipate that there's going to be choppy roads as far as equities go. There could be a pullback if the Fed is not really convincing the markets that they're going to keep this accommodation lasting a lot longer. So I think everyone's going to be really fixated though on the virus mutations. If we start to see that really derail the reopening process in these next several weeks, I think that's really going to dictate where we see Fed policy. So I think right now everyone's still focused on the virus.
We are also focusing on cryptocurrencies. We are watching many movements in that market, and there's this debate in which some think about Bitcoin as a strategic asset, and some of them think about Bitcoin about a speculative one. What do you think?
Well, I think right now it's pretty apparent that Bitcoin is probably the most volatile asset you could trade. It is a speculative investment. I think that you're probably seeing that most traders, most of the institutional money that has jumped on this trade and a lot of the retail people are anticipating that Bitcoin is an investment that you just buy and you hold it for a few years. I think that the market swings are just they come out of nowhere sometimes, and it's the volatility really can crush a trader. We've had, despite the the last few months, where we've seen it pretty much go from 20,000 to over 50,000, there has been over 20% drops throughout that period. So I think you have to understand that the volatility is not going to ease anytime soon. But overall, the fundamentals are still improving for Bitcoin. Regulation has not really become a big fear for this market, and I think there's a belief that governments and central banks are still in the process of doing their evaluation. They're going to have more hearings, and right now it seems that the path for Bitcoin is fairly supported on the regulatory front, and it looks like that as far as the institutional demand, that is still unfolding. I think, there was a poll done by Gartner who polled, I think, over 70 finance executives, and it was roughly 5% said they are committing to investing in Bitcoin this year. So even if it's just 5% or low single digits of companies that do provide positions in Bitcoin, that's enough to warrant much more higher prices. So I think it is going to be a wild ride, and I think though there is still strong drivers, there's a lot of momentum that is still behind that move, and investors are very much fixated on this because there's a belief that this blockchain technology is not going away anytime soon, and I think ultimately you're going to see that central banks are racing. They're trying to get their digital coins out there, and right now the first one that's going to have theirs is China with their digital yuan, but that's not for a couple of years. The ECB is 5 years out, and the US is really just starting their studies, so it's going to be a long way and a free reign for Bitcoin and a lot of the other top cryptocurrencies.
We note these insights. Thank you very much, Edward Moya, analyst at Oanda.